Kim, you want to get started?
All right, welcome to the Goochland Chamber's Lunch and Learn webinar, and today we're going to be talking about PPP. The webinar has been brought together by Sandy Ratliff of Virginia Community Capital, and we're very thankful she put this together for us today. And Sandy, if you want to take it from there.
Well, thank you, Kim. We're happy to be partnering with the Goochland County Chamber of Commerce. Virginia Community Capital has been in the forefront of helping businesses during this pandemic, and especially with the PPP program. And we are happy to be partnering again with the Virginia Small Business Development Center Network and the Small Business Administration to present this session. Our objective over the next hour is to help individuals understand the eligibility requirements to get the process started for their PPP loan forgiveness. But before we get started, I wanted to note that in order to keep the webinar flowing and that we can stay within the 1 hour goal, we have everyone muted. However, we want to hear from you. So if you have a question for any of our speakers, please post those in the Q&A sections and they will be addressed at the end of the presentations. I'm excited with the lineup of partners that are joining us this morning on this call. They bring with them a wealth of knowledge and experience. I'll introduce everyone in the order in which they'll be presenting. First up will be Tim Johnson, he's the director of the Mason Small Business Development Center, who will share some information and resources on the SBDCs and provide a walkthrough on how to prepare for the PPP loan forgiveness application. Second up will be Matt Ho. Matt is the Assistant Vice President, Small Business Loan Officer with Virginia Community Capital, and he will provide an overview of the loan forgiveness process and requirements from a PPP lender's perspective. And then also joining us today is Carl Noblick. He is the District Director of the Virginia Small Business Administration, and Carl will share some of the top questions and misunderstandings from businesses regarding the PPP loan program, and he will also be on board to address any questions you may have in the Q&A section. So as I mentioned earlier, post those questions and we will address those at the end of the presentation. So Tim, I will now turn it over to you.
All right, let me pull up my presentation. What I have is a short presentation for everybody, and hopefully it will answer a few questions that I expect that you'll have. So hopefully we can go ahead and get started. Thank you very much. Good morning, everyone. I am Tim Johnson, the director of the Mason Small Business Development Center. We are part of the Virginia SBDC network, and for those who don't know about the SBDC program, we actually have 26 centers throughout the Commonwealth, and we are primarily in partnership and funded by the Small Business Administration. And in addition to that, we work with a number of local entities, including economic development authorities, chambers of commerce, as well as colleges and universities to host us in order for us to provide business resources for you, the small business owners. For those who don't know us, I recommend that you go to the virginiasbdc.org website and just look at locations. And for those in the greater Richmond area, my center is the one that supports you, as well as all of Northern Virginia. And really what we do is provide business counseling that's on a one-on-one basis, or a series of seminars, workshops, and training sessions to give you the information to help you grow your business. And we are more than happy to provide and answer questions related to the pandemic disaster assistance program. And it's certainly been the SBA's expectation that the SBDC program is on the forefront of providing our small businesses with the appropriate information. And what I will also mention is that all services that we provide to you is at no cost. So take advantage of us. And we also work very closely with a number of our business providers like Virginia Community Capital and other service providers, and so we are certainly a source of referrals. What I'm going to talk about a little bit is starting off with the PPP Flexibility Forgiveness Act. We'll talk a little bit about the overview of what it is, some of the schedules that need to be completed, how you complete the application. In certain cases, there may be safe harbor tests that you need to be aware of, and a few other tips and considerations. And we do have a great resource guide called the Recovery Resource Center on our website, and we certainly suggest that you go visit it. The first thing I would want you to do, though, is actually go to the section where we are talking about the loan forgiveness, because we have the downloadable forms for the long form that include the instructions, a spreadsheet that actually mimics the application, that does all the math for you, and in addition, in both the long form as well as the easy form, and certainly the application itself. So while we know that banks right now are not accepting the forgiveness applications, this is your opportunity to prepare for it. And as we record, I believe we are recording this session, we'll also put this recording up there. So the PPP Flexibility Act was signed into law by the President back on June the 5th. And what it did from the previous law was change the coverage period from 8 weeks to 24 weeks. And one of the things the Congress had originally intended was to provide funding for small businesses to cover payrolls for roughly an 8-week period. However, once businesses received their funding, they found that their businesses were not open yet. Certainly in the Commonwealth, we were still under on a closed work environment. And it was very difficult for businesses to actually make payroll when you couldn't hire or bring your employees back to do any meaningful work. And the most important thing is they now extended that to a 24-week period. The one thing, though, is it's not going to go beyond December 31st. So so keep that in mind. If you've not applied for PPP yet, that'll be a consideration. The other big rule was it originally had intended for 75% of the proceeds to be used on payroll and only 25% on non-payroll costs like rent. They've changed that now to a 60-40 split, so it certainly makes it easier for businesses to get the full forgiveness. And if you are using the 24-week period, salaries that you can pay actually increase to $6,000 through that period. And the way they do that is they're looking at the maximum is taking in $100,000 annual salary, dividing that by 52 weeks, and then multiplying that by 24 weeks. The one thing, though, I'll have to say it's a little bit of confusion is the owner's pay, though, is capped at only $20,833. So owners themselves can't get the full $46,000, just the equivalent of two and a half months of salary. And the other thing that they did create was something called the 3508EZ form that makes it certainly more simple to actually ask for forgiveness. And so I'm going to talk about that first. On the right is, or sorry, on the left is just a snapshot of the line items that are there. And the eligibility requirements really start if you are sole proprietor or self-employed and you have no employees. This is the form that you use, and it's going to be very straightforward. If during the period of this year and you really have not reduced your number of employees or your wages below 25% of the period that really started in January 21st, then you can also use this form. Though we certainly know that certain businesses were required to shut down, so you won't be penalized if you had to shut down, lay your employees off, and then once you were able to come back and open your business and you brought your employees back, then you're also again able to use this form. And it does look at a test from January 1st to March 31st, as well as February 15 as comparison periods, really looking at your full-time equivalents and, did you bring the appropriate people back? However, if you don't fall into the easy form, there's the long form, and it really starts out with page 1 is the application itself. Page 2 has this certifications and signature line, and it calculates the forgiveness amount based on input from a form later in this document called Schedule A. Schedule A starts on page 3, and it calculates the payroll costs portion of the forgiveness. And it relies on a PPP Schedule A worksheet that starts on page 4. And this is where you're going to be documenting information about cash compensation for your employees, as well as the full-time equivalent determination and any potential salary reduction determination. And I will get into that in just a minute. So where do we start? We actually start with the Schedule A worksheet. And if you look at it, it's a pretty straightforward table that you list your employee, put in the cash compensation. And when we mean cash compensation, it is their gross salaries, not their net payroll, but their gross. So it is not including any payroll tax that you're paying on their behalf. It's their gross wages. We want to know what is their average full-time equivalent during the coverage period. And when we mean full-time equivalent, if they're working 20 hours a week on the average, that's a half FTE. If they're working 40 or more, that's a full FTE. So there's fairly straightforward math to determine what is the FTE calculation. And then in the very far right column is if there was a situation where you reduce their hourly wage, or for a salary person reduce their salary below 75% of what they were paid for before COVID, then there is a potential penalty that will be imposed on the forgiveness form. So what the worksheet tables 1 and 2 is the gross paid wages for the 24-week period. And so we will need them to match your payroll register. Payroll register companies like ADP or Paycheck actually have reports for you to pull that you'll just be taking the numbers right off those reports and applying it to your worksheet. We are also doing this full-time equivalent calculation, and for full-time employees, you enter 1. Part-time employees, it's a calculation. For example, a 30-hour average divided by 40 hours is a 0.75, and you'll be adding those up as a total. And then for the salary hourly wage reduction calculation is based on the safe harbor tests that are at the bottom of page 4 and begin those tests. And so what we think the first thing to do is gather your payroll registers for the coverage period and the comparison periods, which would be prior to the COVID time period. For the FTE and the salary reduction determination, again, these test questions begin on page 4, and they are applied to each employee. And so one of the things that we're comparing is, well, do you have the same number of FTEs as of February 15th or through the February 15th through April 26th pay period? And then at the point that you're ready to submit your forgiveness application, how many FTEs did you have at that point? And so if you, for example, had 10 FTEs prior to COVID and are now sitting at 9 FTEs, then you're going to get 9/10 of the forgiveness applied. So you'll have a reduction percentage calculated, and that goes to schedule line 13 on Schedule A. And then for the wage determination component, again, it's a test to see if you've at least are paying at least 75% of their either hourly wage or their salary compared to January 1st through March 31st. So we're again, it can be can be a reduction to the overall forgiveness if you had to cut people's salaries. And once we do this worksheet A, then we're ready to move to Schedule A. And the information that's coming from the cash compensation box 1 translates right into line 1, and then lines 2 and 3 talk to the total FTEs, and then if there is a salary reduction calculated amount would go on line 3. Further on, if you have employees that earned over 100,000 or from 2019, they would go on to table 2, and that's what lines 4 and 5 are for. And then this is lines 6 and 7. This is where you can include any employer contributions for health insurance or employer contributions for retirement plans like 401ks that have been paid during the coverage period. And at that point, the line 8 is for local, state, and taxes. Most Virginia businesses don't have any local state taxes, we're not talking about income tax, but a local tax that might be implied or computed. Unemployment tax would not be included here. And then last and most important is line 9 is for you, the business owner's compensation, to be put on this line. It would not be included in tables 1 or 2. As we move further down, we're going to get the calculations for the safe harbor test. And then ultimately, we're going to drive information specifically to see if there are any reductions to your forgiveness, which is lines 11 through 13. And then at that point, on completion of Schedule A, we can move on to the first page of the app. And we're going to bring line 10 over from Schedule A. And then at this point, if you have rents, lease payments, business utilities, or business mortgage, if you are paying for, if you own your property and you're paying a mortgage on your business property, at that point, you can include your expenses during the coverage period. Lines 5, 6, and 7 will bring in any of the reductions if the safe harbors were not met. And then ultimately, we get to the point where we're looking at your PP loan amount against the forgiveness amounts, or to make sure that you've paid at least 60% of your payroll has gone against against the forgiveness amount. And at that point, it will calculate the smallest between lines 8, 9, and 10. But what I will have to say is line 11 will have currently as the instruction to indicate that if you have received an EIDL advance, that advance will be deducted from your forgiveness amount. So if you had a $5,000 advance, even though the forgiveness amount may appear to be the entire amount, the banks will still ultimately convert that advance into a loan. Signatures and initials on all the conditions and certs and representations are on page 2. Your lender will be providing you other documentation to support this, and I recommend using the SBDC spreadsheet that I showed in the very beginning to do the math. An example of the beginning of the variety of representations that you need to certify. And a couple of other tips. I'm not going to talk about all of these. In certain cases, there can be an alternative coverage payroll period, sort of depending on the timing of your payroll. If you try and prepay a bunch of expenses, like pay your rent for a full year, that won't be considered eligible. It's only for those real payments that you incur during the period. We would expect if you had an issue where you look to bring an employee back, but they refused, and you have provided documentation to the point or terminated an employee for cause, make sure you keep that documentation, because reduced headcount won't affect your forgiveness if you've appropriately documented your inability to bring them back. And if you received your PPP prior to June 5th, the original PPP was to be paid back over a 2-year period. It may be converted now to a 5-year loan, but it is at the option of the lender. If you receive your loan after June 5th, then it is a 5-year loan at a 1%. And the first 6 months are deferred, so you won't begin paying this back until 6 months after the loan has been determined. And then lastly, the application package you submit, your lender has 60 days in which to determine the forgiveness amount, and then we'll submit that to the SBA, and then they'll have another 90 days to review the lender's recommendation. We recommend keeping your records for at least 6 years, and actually, as of right now, most banks aren't accepting the forgiveness applications just yet. Most are saying not until August, and they're usually going to be doing it through their portal. So with that, hopefully put your questions in the chat window, and I will stop sharing, and we can move to the next part.
Thanks, Tim. Matt,
Yes,
you ready?
I am. Need to share my screen. Hold on one second. and hopefully y'all can see that. So good morning. I'm one of the small business lenders for Virginia Community Capital, located here in Richmond, Virginia. We are a community development financial institution. We have locations in Richmond, Christiansburg, and in Norfolk, Virginia. And I focus mainly in the Richmond, MSA, and Northern Virginia market. And my main lending is utilizing the government guaranteed programs such as the SBA to help small businesses like you all grow and expand their businesses. Today, I'll be focusing on what our lending institution will be requiring from our PPP clients when you submit your Form 3508 or 3508EZ. Please note that packages from that you submit to your individual lender may be a little bit different. They may require different documentation, as Tim indicated. So make sure to work with them. But this should hopefully be a pretty similar guideline. On another note, I just wanted to clarify and wanted to make sure that you are aware that there is a standard long form 3508, and there is also a 3508EZ, and obviously the 3508EZ form will require less documentation per the SBA guidelines, but you'll still need to have those, as Tim said, on file in the event that a lender, your lender does require it, or the SBA and the lender need to review your file. So the forms that we are requiring are essentially the loan forgiveness calculation form, which will be page 1, the second certification and representation page that they signed, and then Schedule A, which Tim also showed. The documentation backing up the calculations are what each individual lender will be requiring, and the level of detail may change depending on which bank you're working with. In addition to that, we are also asking our clients to submit a check sheet, which you can see here. And I imagine that the individual lending institutes will have something similar. So please, if you aren't with VCC Bank, then don't submit this with your application package. Just ask your lender, and they'll probably provide something similar. So the required documentation can be broken down into 3 main categories: payroll, FTE, full-time equivalents, and non-payroll expenses. So the first one is the largest one, and it is the payroll one. So as Tim stated, the approval of the PPP Flexibility Act allowed borrowers borrowers can be eligible for loan forgiveness if they use at least 60% of their loan for payroll, which is a change from the previous 75% to payroll. And so in order to qualify that, you have to provide certain documentation to verify the eligible cash and non-cash benefits covered during the covered period or the alternative covered period. So payroll will include your salary, wages, commissions, or similar compensation, your cash tips or equivalents, payment for vacation, sick leave, allowance for separation of dismissal, and so on and so forth. And for independent contractors or sole proprietors, these will include your wages, commissions, income, or net earnings from self-employment. The SBA has also clarified that salary, wages, and commission payments to furloughed employees, bonuses, or hazard pay also fall into similar compensation and can be included in the payroll, so long as it doesn't exceed the $100,000 maximum on an annual basis. So eligible payroll costs are considered paid on the day that the checks are distributed, or when you originate an ACH transaction. And these payroll costs are considered incurred on the day that the employee's pay is earned. Costs incurred but not paid during the last pay period of the covered period are eligible for forgiveness if they are paid on or before the next regular payroll period. So what that means is if an employee earned pay but was not paid during the last covered period, you're able to count them if you paid them on or before the next period. So what documentation will you need to submit to verify that payroll? And as you can see here, and you can also find on the instructions for either the 3508 standard or the 3508 EZ, all banks are going to require your bank statements or third-party payroll services. Tim had mentioned ADP. You could also use Gusto or Intuit, whatever payroll service, third-party payroll service you have, they probably have something that you can submit over to your lender. You'll also need to include your tax forms, and that's your payroll tax filings, typically your 941s for the quarter, the period of the covered pay period, and your state quarterly business and individual employee wages reporting relevant to your states. And you'll also need to submit, if you did fill out lines 6 and 7, you'll need to submit payment receipts, cancel checks, or bank account statements showing employer contributions to those group benefits. So if you ended up doing the 3508 standard form, you'll need to submit the following, but if you did the EZ form, you'll need to at least keep the following documents for the full-time equivalents. So you would provide documentation showing one of these three, either the average number of FTE employee on payroll per month employed between February 15th, 2019 and June 30th, 2019. Documentation showing the average number of full-time equivalent employees on payroll month employed by the employer between January 1st, 2020 and February 29th, 2020, or documentation showing, in the case of a seasonal employee, the average number of FTE employees per month between February 15th, 2019, June 30th, 2019, between January 1st, 2020, February 29th, 2020, or any consecutive 12-month period between May 1st, 2019 and September 15th, 2019. Again, if you did qualify for the EZ form, please note that page 4 indicates that you have to keep these documents on hand in the event that the lender or the SBA requires additional documentation. And additionally, if you did check, if you check the second box on the EZ form, which indicates that you're keeping your head count and salaries the same, you'll be required to report the average number of full-time equivalent employees on your payroll on January 1st, 2020, and at the end of the covered period. This can be done with payroll reports covering January 1st and the last payroll of your covered period. So the last category would be the non-payroll expenses, which can be seen here. Documents in this category need to verify the obligations and services in effect prior to February 15th, 2020, and eligible payments from the covered period. So this is probably one of the, in the packages that we have received that we've kind of kicked back to the borrower, they have neglected to provide a proof that they had these services in effect before February 15th. So make sure you take special note if you are including any of these into your categories. Note that the payroll costs must be paid during the covered period or incurred during the covered period and paid on or before the next regular billing date, even if the billing date is after the covered period. But the SBA has provided clarification that if a borrower's non-payroll expense straddles the covered period and the non-covered period, and are paid after the covered period, they may seek partial forgiveness of that expense. For example, a borrower's covered period ends on July 26th, and its electricity expenses for July are not paid until, let's say, August 10th. The expenses between July 1st and July 26th are forgivable, so long as you make that payment. So what would fall into the non-payroll expenses? Business mortgage expense, interest expense, that would cover. So we would need a copy of the amortization schedule that you would get from your lender on your mortgage, with the corresponding receipts or the mortgage statements from February 2020 and the months of the covered period. Business rent or lease payments. So we would need to see a copy of the lease, the current lease agreement, and receipts of payments during the covered period. And then also utility payments. And utility payments can include electricity, gas, water, transportation, internet, and telephone, which began before February 15th, 2020. So again, we would need to see a copy of those invoices from February 2020 and any of the paid receipts during the covered period, or canceled checks during that covered period. So that is pretty much the documentation that every lender will require. Again, they may require additional information. And Tim has pretty much covered this part in his tips and consideration, but I thought it was worthwhile to cover again. The Flexibility Act extended the covered period from June 30th, 2020 to December 31st, 2020. It also extended it from an 8-week covered period to a 24-week covered period, but it can't go beyond December 31st, 2020. And those are some of the highlights that I wanted to reiterate that Tim had mentioned. And also that, again, the SBA has not provided guidelines to the lenders on their forgiveness process. So, so we here at VCC are not accepting applications just yet. I'm hoping that changes in the next couple weeks, but I have no idea, and I'm not sure if anyone has any idea of when those guidelines will be presented. And as Tim also mentioned, we will have 60 days from the time that you do officially submit your complete application to submit to the SBA, and then the SBA will have 90 days from then to follow up with the lender to ensure that you've received forgiveness or partial forgiveness, and if anything else happens, if there's a review or we need to reach out to the borrower, that is when we would be asking for that additional documentation, like the tables on the long form or the FTE documentation, so on and so forth. So with that, I will hand it back over to Sandy, or Carl, if you want to just take the reins.
Carl, are you on board with us?
Absolutely. Thank you, Matt. And Tim did a great job presenting several things that, since on a daily basis, I get the phone calls continuously about getting questions answered. And one of the key components that I keep trying to stress to the businesses is it's the relationship with your lender that you're trying to work this out. It's not SBA that's making the decision on this. It's what you've negotiated with the lender, which you supplied originally with them, and what you're going to supply when you go for your forgiveness. And that seems to be a misconception out there, because we even have where they've actually talked to the lender and the lender has told them to talk to SBA, when it's clearly the lender is in the decision-making process at that point in time. So that's one of the most common questions flying right now out there related to this. The other thing is that a lot of people are coming back with the payroll and trying to figure out, you know, the health benefits, retirement benefits, and everything else, and asking well, can I ask for more money because I forgot that? And unfortunately, once the lender has submitted their 1502, there's no further action can be done on that loan, so it is done at that point. So there's been several businesses that have not been able to take full advantage of the payroll protection plan because of a misunderstanding of what they actually could count in the process. A number of people are asking about what's the justification that's required for if employees don't return or if they let an employee go, what's being requested with that. Matt brought up about the FTEs, and Tim did also, how to calculate that. So they figured their numbers for full-time employees. The other thing is about payroll taxes. On the second round, they kind of put that on hold, where in the first round, the payroll taxes still had to be addressed. But in the second round, Congress just recently released here, the payroll taxes don't have to be done. So that was a huge help to people. Another question that keeps getting brought up is, what's the penalty if I didn't use all my funds or the funds were not met the 60-40 rule currently with the payroll and all that? And as I stressed to them, I said it just converts to a regular loan at 1% interest. So that's what basically you'll be paying back. Originally it was 2 years, but 5 years, and Tim made an excellent point. I've had several calls where people say, I want it changed to 5 years. I said, once again, that's a discussion you have to have with the lender, and that's a decision the lender will make, not SBA. So there's a lot of misconceptions when it comes to that. Also have had a fair number of people wanting to buy new equipment, which I don't know why, but I've been asking if that's okay to do, which we've had to inform them, no, that's not what this program's for, dealing with it. The other is bonuses. You know, bonuses were always a part of your process. There's not an issue, but if you're just trying to meet the 60-40 rule and to pay bonuses because you didn't bring all your people back of your choice, then at that point, it's not going to meet the criteria. So these are a lot of things that come up. And then Matt brought up an excellent point there at the end about the prepay and dealing with the calendar date. It ends on, as he used the example, July 26th, August 10th. The utility bills due. Yes, you can pay for the first 26 days. I will tell you that several accountants have given information out telling people to actually pay 2 or 3 months ahead on this and that. And once again, Tim and Matt made it very clear that is not what this program's for. It's for the time period that the funding is covered, dealing with that. And with that, Sandy, I'll turn it back over to you to take it to the next section.
Sandy, you're on mute.
I had something pop up on my screen I didn't recognize. We do have a couple questions, and I will, I guess, address this to Carl and Tim. What are considered utilities? I see that they have the word also transportation. What is considered transportation? So there's actually two questions in one.
Tim, I'll let you take the utilities and I'll take the transportation.
Tim, you're muted.
I just did it to myself. Utilities are going to be things like electricity, water, you know, anything on the power bills, but it also includes things like telecom, if you've got internet access. And so it's really going to be the utilities are the things that that you need at your facility in order to run the business. So I think probably the harder one is how does transportation fit into this, and I'll certainly leave it over to Carl to talk through transportation.
Thank you, Tim. Yeah, the transportation's the fuzzy wheel in this. And what it's focused on is those companies that basically have to move around. So let's just use an HVAC provider or a truck driver, Uber driver. Those are people that are using a gasoline or diesel as a product, but in reality, it's a utility because without that product, they can't do their job. And so that's where that falls, but it does not fall into repair and maintenance. That's a working capital issue. It is just focused on the fuel that's actually being provided into that vehicle or truck at that point in time. So that's where transportation came into play on this.
Sandra, I hope that answered your question online. We've got another question from David Bass. What is our time frame to actually have this forgiveness application submitted? My bank has recently added a portal to allow us to begin the process, but their warning is they continue to be updated in this process, so they're recommending waiting as long as feasible. I submitted the time frame question. I am also a single member LLC, if that makes any difference in the process, but what is the time frame?
This, and the reason the lenders are telling this, and Matt brought it up, and also Tim, which is excellent point, we haven't gotten the final guidelines. And so what's been talked about preliminary-wise, may be there or may not be there. And so you've created your packet and submitted it, and the lending institution's not going to react to it until such time they get the final guideline. So it'll sit there and it may be coming back to you to actually redo again. So the lenders are just trying to save you time and energy by making sure you have everything in place. I think Matt did an excellent job of what's going to be basically asked in what I call 90% of them. 10% will have unique situations that will have to have further investigation, but pretty much what Matt identified. If you have that readily available, as soon as that final guidelines come out, and I promise you the lending institutions are going to let you know immediately because they want to get these processed as quickly as possible. Being the sole proprietor or LLC, independent contractor, you're probably going to be using easy forms, so that'll go fairly quickly straight through without too much difficulty because there's less being asked of you. But at this time, I highly recommend, just like stated by your lender, also Matt and Tim, just if you hold on to it because they really can't do anything on it until they get those final guidelines.
Just to add a little bit to that, some of our clients have, they within 10 weeks of receiving their funds, they've spent all their money on payroll, on the non-payroll items. I think they're ready to submit. So that'll be one of the questions: is do they need to wait till the end of the 24-week period, or will they be able to submit, say, after 12 weeks? And so we're waiting on the guidance for that. Hopefully, as soon as you've certainly maxed out your PPP loan and it's all forgiven, let's get it in there. That's what I'd like to see.
So to confirm, Virginia unemployment tax, VEC, is not used when computing your PPP loan forgiveness?
Yes, that's correct.
Okay. I do not see any other questions at this time. One thing I was wanting to ask is if you were giving someone guidance, what are the top 4 or 5 items of records that they definitely need to have and have the details when they're getting ready to do this application?
Well, for me and the clients that I've already gone through, one of the reasons we created the spreadsheet was to help with some of the math. we do need to look at certain payroll periods prior to COVID and then during the coverage period. And we're going to be going through it literally at an employee line by line. So we'll want to gather that information, then use the spreadsheets just to make sure that you're meeting all the safe harbor tests as it relates to the FTE calculation. Once you get through that, then the rest of it generally goes it's quite straightforward. So start with pulling your payroll registers on the periods that are defined in the instructions, and then utilize our spreadsheets to help you figure out where you are in terms of each of the costs.
And Matt, anything you want to add?
So I was gonna provide a little bit of insight when we've taken a look at some of the packages and some of the questions that we have received. Well, I guess what I will say is when you're submitting your covered period documentation, make it as easy as possible for the lender to identify what is being paid, where it's coming from, what it's being paid for. The easier that your lender can identify those items, the smoother the transaction will go, the smoother the process will go, and there won't be frustration on either side. Another thing that we've gotten a lot of questions on, and I'm not sure if it's maybe just our documentation, is on the actual form where you find your SBA and your lender number. Your lender loan number will be different than your SBA number. On ours, it's on our promissory notes. So whether it's was sent via DocuSign or physically or whatever it may be, I would imagine that your numbers will be on the promissory note, and those again are separate numbers. So if you're not sure, make sure you check with your lender to identify where that is. The next thing that we've received questions on, and I'm hoping that it doesn't really apply to anyone here, since this is all about forgiveness, is that the PPP application for the original funds, that's still open. That's open till August 8th. I'm not too certain about too many lenders that are accepting them, but you are still eligible, so you just have to check with the lender. So if you have any friend businesses that are still looking for the PPP, they can still apply, but it's a short window. And those are some of the tips that I would have. Just document everything, make sure that if you are using the easy form and you qualify for one of those 3 pieces, that you have the documentation to back up that you qualify for the easy form. That is something that you want to make sure you have on hand in the event that those documents are called for. So, and that's pretty much it.
And Carl, anything you want to add?
No, Tim and Matt did a great job. Don't have anything further to add.
Well, great. I don't see any other questions. I thank you for presenting today, and for those that are watching, we do plan to share the video from today with Kimberly at the Goochland County Chamber of Commerce, and she will be distributing that as well as any other handouts or information from our speakers. So thank you on behalf of Virginia Community Capital. Again, we are very appreciative to be partnering with you today, and follow us on our social channels and on our website, because we have a full lineup of professional development workshops to support businesses during this trying time. So Kimberly, I'm going to turn it over to you.
Thank you. And I want to say thank you to you for putting this together, and thank you to all of our panelists for coming out today and helping us do this. And thank you to everybody who attended. If any of our chamber members or any Goochland County member, just anybody in business needs any help, please reach out to us, let us know, and we will definitely either give you the answers or get you in touch with the people that will hopefully be able to help you. That's what we're here for, and we love to do this. So we look forward to seeing you all again, and have a great and safe weekend.
Thanks, everybody.
Thanks.
Bye-bye.
Bye-bye.